Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, June 3rd. We got a few items here on the economic calendar, so we'll just jump right into it. We got the big one. One of the big ones this week is the ADP employment report for the month of May. The month of April was actually revised a little bit, an improvement actually. It was at a little over 20 point, thousand. So basically, there was an improvement by about a little over 600,000 jobs here. So it came in at 19.557 million job losses. Forecast was calling for about 8.663 million losses for the month of May, and it came in much lower than that at minus a drop of 2.76 million. So what is this basically stating? It's basically showing that people were going back to work. May was actually, a lot of people were going back to work. Things were starting to reopen. So we were seeing some improvement in that area, and I think it's showing that more people went back to work than they probably really anticipated. And we'll have the big numbers by the Bureau of Labor Statistics, so it'll be interesting to see if that shows this type of data as well. Now, these don't always correspond, but we'll see that on Friday, and then tomorrow, of course, we'll get the initial jobless claims. But Friday will be the big day for the Bureau of Labor Statistics with the unemployment number rate and the jobs numbers that they will provide. Now, the next two are kind of a gauge of the services industry, and again, kind of like its predecessors, anything below 50 is contraction. So in April, obviously, it dropped way low by the market services. This one's by the market services at to 27. But however, it improved a bit in May, jumped up 10% or 10 points. Now, the other index here we got is the ISM non-manufacturing index, and this was at 41.8 in April. Forecast count for 44 came in a little bit higher at 45.4 in the month of May. So we had showing some improvement in May. Obviously, we'll want to see what it does in June, and going on to see how fast we can rebound. Last but not least, we got factory orders for the month of April. So we had a drop of 11% in the month of March. Forecast for April is minus 14, and it came in at a drop of 13%. So obviously, that was the big period where everything was probably complete halt in the economy. Let's go ahead and jump ahead here to the headline news. Stocks are way up. Now, they're still in this euphoria. In this euphoria where they're disregarding, the shutdown of the pandemic. That most likely is going to be kind of a slow recovery. That now we have these riots and protests around the country, and we got tensions going on with China. We got a lot of serious issues going on here, and they're kind of disregarding that and just kind of putting up, stock markets continuing to go upwards, and they're just kind of again the kind of head in the clouds, so to speak. And then you look at the ADP numbers that came in, that just kind of took off to another level here. So right now, at this point, Dow's up over 400 so far this morning. It started the morning, up a bit, and then it just took off after ADP report came out, and that just kind of put them in a better mood. Now, this is adversely affecting the bond market. Now, as you can see here, we were just above the 50-day and 25-day moving average, and we just dropped. All that money was leaving the mortgage-backed securities. It dropped. We were down as low as like 23 basis points. Right now, we're sitting down about 17 basis points so far. So that's going to lead lenders to price for the worst. So you'll see pricing a little worse than what we saw yesterday. Now we'll have to kind of wait and see if this holds. We do have the Fed buying probably about $4.5 billion of mortgage-backed securities today. Hopefully that will help kind of bring us back into uh, unchanged levels and maybe get that improvement back to the same as what we had yesterday in pricing. But right now, again, we still got the investors kind of head in the clouds, and they're thinking that everything's all rosy when we got a lot of stuff going on around us, and they're not really paying much attention to that. At some point, they're going to have to wake up, and they'll see that, and we'll probably have the opposite happen. But until then, bond market's getting affected, and mortgage rates have climbed up a little bit as a result here. Let's jump over here, and a lot of it is yields. They jumped ahead of its 50-day moving average. It's up about 7 points, so it's seeing a rate about 0.75% right now, and that's adding more pressure on those mortgage-backed securities. So if yields rise, that means it pushes mortgage-backed securities lower, and the opposite usually happens. Conversely, when this goes down, mortgage-backed securities goes up, and that helps with mortgage rates. All right, so that's pretty much where we're at. Again, mortgage rates are kind of worsened, but we'll kind of watch that to keep an eye on it, see if we get some type of rebound later in the day. As right now, investors are kind of in a euphoric mood for a while, and the stock market just keeps climbing, climbing, climbing. And at some point, they're going to have to get their head out of the clouds and realize what's all going on around them. But in any case, if you guys are in California looking to buy or refinance, I'd love to be able to speak to you. We do have quite a few loans. We are, been pretty busy with the refinances, but we're also helping out people with their purchases too. We're getting a number of those. A lot of people pent up uh, demand that people want to get out and buy homes, and we're getting into that normal season anyways with the summer and all. So again, we'd love to be able to talk to you about your scenario and how we can help you guys out. Either direct message me, the best way to reach me, or email me are the two best ways to reach me. And, uh, and, and email is usually the fast one I respond. All right, you guys have a great rest of your day. Thanks so much for watching, and I'll look forward to talking to you guys soon. Bye bye.